jointly organized by AFD and CDP. I'm Bilal from the European Center for Development Policy Management, and it will be my pleasure to introduce and moderate this session today. As we know, public development banks are committed to finance adaptation, and over the recent years, they have increased, in fact, their adaptation finance, and they have also made commitments last year, a joint declaration last year at the summit. Yet, in fact, many of the public development banks still have a long way to go to properly address the question of adaptation and resilience. Take, for instance, the European Investment Bank that has committed only 11% of its climate finance in developing countries. Only 11% is dedicated to adaptation. And if we take the other large European bank, the EBRD, it's only 15%, while others have been doing better, like the AFD with 40%, and the African Development Bank going up to near 55%. So what we can see is that there's a huge discrepancy between the way different public development banks engage in adaptation, and probably there's a lot of scope to learn from what works and what are the challenges and how to overcome them. There's definitely a willingness to do much more. I mentioned the EIB doing only 11%, but in fact they just adopted last week a new climate adaptation strategy, indicating their ambitions to do much more. Yet when I discuss with public development banks, quite often they indicate the difficulty to do more on adaptation, and for instance, complain quite often that there are not enough bankable projects. In my view, the problems are perhaps twofold. First, I think too often there is not a proper assessment by financial institutions, both public and private, of the climate risk, which are quite underestimated or not poorly assessed. So there is a need to better measure and to have better methodology to identify the climate risk exposure of the portfolios of public development banks and in general also private financial institutions. There is also a problem of perhaps underestimating the benefits of climate adaptation. For instance, in addressing food insecurity and promoting resilient and sustainable food systems, or in preserving the biodiversity and fostering nature-based solutions. So probably if there was a better assessment of both the risk of climate change and the benefits of addressing climate adaptation, then we would find that the expected returns on the projects on climate adaptation could be much higher than what are normally assessed for. And so we would find the bankability of many more of these projects. And there's also a need, of course, to develop much more approaches and in a more integrated manner, using different type of instruments, such as blended finance, that could be used in a much smarter and sometimes effective manner to try to promote such projects. There's a need to reach out to a number of different partners and communities, including the private sector. This is the case, for instance, of the Global Food Finance Network that brings together different private financiers around climate adaptation finance in the food system. There's a need perhaps to consider some kind of nexus solutions, trying to connect adaptation with nature-based solutions, with biodiversity, with food security, with social dimensions. So we have to think, perhaps envisage more comprehensive type of approaches. And a need also to adopt very inclusive approaches, reaching out to the beneficiaries of the climate adaptations. The financial intermediaries, for instance, but also the micro and small and medium-sized enterprises, the local farmers, the local communities. And that can be done also through dialogues, engagements, different type of platforms to ensure that we really respond to their needs. Last point perhaps I'd like to emphasize is the need to cover both the short-term immediate response to crisis, at the same time as trying to do more longer-term resilience type of action. And we have seen that very well illustrated, of course, with the COVID-19 crisis. So to discuss all these issues, we have a fantastic panel with us to discuss this question of the nexus between climate, biodiversity, and crisis. And let me turn first to Mr. Patrick Verkooijen, who is the CEO of Global Center on Adaptation, really the experts on what to do on adaptation. And let me turn to you, Patrick, and ask you, what does success mean for the adaptation agenda at the COP26? And what do you expect Glasgow will be able to deliver?
Well, thank you so much, San, for this very big question. Also, thank you to the organizers of this particular session, AFD and CDP, for really driving this agenda forward since the last Finance in Commons Summit. Greetings from Rotterdam. I'm sitting here in the largest floating office in the world. It was inaugurated last month by 30 global leaders. And it was also quite interesting because it was on the back of the literally, which you can see in my back, on the floods happening in Europe, right? I mean, I think it really, in the Netherlands and other parts of Europe, it brought home this message. The climate emergency is not a far distant threat. It is here. So on the occasion of the opening of the floating office only a month ago, these 30 leaders, I mean, heads from African Development Bank, Kristalina Georgieva, IMF, the president of the African Union, foreign ministers, business leaders, they basically came forward with a sort of a bold proposition, what Glasgow has to deliver. Well, they said, if the climate emergency which we experience in, whether it's in Europe or in the United States or in China or in Africa or in South Asia, if that's happening with a 1.1 warmer world, let alone what will happen in a 1.5 warmer world, which the IPCC already indicated we will experience by 2030. What if we were to go into a 2 degree plus warmer world? I think the key message which came out for Glasgow was we really have to accelerate and scale up our ambition on an adaptation on an equal footing with mitigation. For this group, for this panel, that's not a new message, but for the Glasgow community, so to say, I think there's still lots of work to be done. In essence, the group came with 3 overall asks, or even better framed, offers for Glasgow, what it should deliver. One is on ambition. It's vitally important that the NDCs, which are currently on the table, which we all know are not ambitious enough, will increase their ambition over time, meaning not every 5 years, but we'll have a mechanism that we will see every single year an increase in ambition. That's sort of a key message which came through from those global leaders present here a month ago for Glasgow. Secondly, San, as you already alluded to, financing is key. You referenced the ambition of the EIB, you referenced where the African Development Bank currently is, or the AFD currently is. The 100 billion needs to be delivered comes Glasgow. We all know this is the big elephant in the room. There is no success for Glasgow absent the delivery of that promised commitment on an equal footing of adaptation finance and mitigation finance. I mean, I'm sure Amal will speak to this point as well. What we currently see in terms of flows is just 21% globally, which goes to adaptation finance. So that drastically needs to be rebalanced. But it's not only the 100 billion, obviously, right? We're financing adaptation efforts. We need to unlock the trillions of investment capital for this particular agenda. That is why Kristalina Georgieva's effort at the helm of the IMF of targeting the special drawing rights also to finance resilience is vitally important also as a deliverable comes COP, which is only less than 2 weeks ago. And thirdly, the message was very clear. It is about partnerships. We, meaning the GCA, together with the African Development Bank and many of you, we have launched with African leaders the so-called Africa Adaptation Acceleration Program, AAAP, which is the largest program to date for the African continent to invest in adaptation, 25 billion over 5 years, of which half of which is already committed through the African Development Bank. So success/failure for Glasgow from the African continent perspective is that the missing 12.5 will be mobilized and put on the table in the leaders segment literally 2 weeks from now for 4 pillars. You mentioned, San, food security. That's one pillar, obviously critically important for Africa. Resilient infrastructure is vitally important because we know the economic dividend is huge. Thirdly, we need to capitalize the youth dividend of the African continent. So we have a dedicated work program for the African continent on mobilizing youth and jobs. And fourthly, it is about innovative finance. The instruments, San, which you just referenced, whether it's a resilience bond, whether it's private capital, that's precisely why we have the collaborative, the Adaptation and Resilience Investment Collaborative. I mean, it's anchored by CDP, it's anchored by FCDO, it's anchored by GCA and many other PDBs. That needs to step up. We need more members with stronger commitments to be demonstrated on the table comes Glasgow.
Yeah, thanks a lot for this call to do more. How, though, the public development banks could try to participate and stimulate or perhaps show the way to this effort that has to be, as you were saying, more global and in partnership?
So if we just focus in this instance, because that's my preoccupation in this instance for Glasgow on Africa, we know public sources in and of itself obviously is not enough. How much is flowing to the continent right now, to Africa? $6 billion on an annual basis. We have done the assessment, which we will publish exactly a week from now. What are the investment needs for adaptation, in this case for Africa, on an annual basis? 33 billion, right? The step from 6 billion to 33 billion is obviously not an ODA bridge. We need private finance to come in. We need to have tailored instruments being put on the table and being utilized to unlock the financing at scale for the African continent. And public development banks have a vital role to play, but they need support, they need strengthening, they need a stronger orientation on adaptation and resilience finance so that they become not just part of the problem, but quite frankly, part of the solution for adaptation finance to date.
Thanks a lot. We'll get back to the role also of the public development banks. We have Laura, Kerr, and Amal, Lee-Amin to tell us also what DFIs can be doing. Let me perhaps move to, and we'll come back to the discussion, but to Peter Maurer. You are the president of the International Committee of the Red Cross. And so in that capacity, you're well familiar with the humanitarian side of things, from different crises, responding to these disasters and conflicts. That seems to be your daily job. How does climate adaptation or climate change impact these kind of elements, and why you would have to worry about climate adaptation? Why are you here with us today?
That's a good question. First, many thanks to IFD and CPD
and well, of course, we're happy you are here. We want you to hear why you are here with us
on this panel. But it's a great question, Sam, because it's somehow also for the first time that I'm probably on a panel with you, and I think it comes from the recognition over the last decades, and in particular the last 10, 15 years, that wherever we move in terms of emergency response on humanitarian grounds, we see climate change intersecting with humanitarian needs dramatically, whether this is in the Sahel, in Afghanistan, where I'm just back from, to Ethiopia, where I'm going next week. Wherever I go, I think climate change becomes the visible factor which intersects with war and conflict and violence as another driver, which is normally our first and foremost entry points. And what we see is that in those contexts in which we operate, the most vulnerable to climate crisis are also the most vulnerable to conflict. What strikes me always is to see that the 25 countries most in need of adaptation are to a large extent also in the middle of war with high levels of violence and conflict. So their capacity to adapt is drastically reduced because of conflict and violence. Their state structures are weaker, their social networks are weaker, their economy is eroding their development gains are in danger. And I think this vulnerability creates an atmosphere where we have to reflect on how we frame humanitarian work 2.0 in the context of adaptation. And I think that's where we are at the present moment. So we did a major shift over the last couple of years in how we frame humanitarianism. You learned about humanitarian as short-term emergency. We are increasingly looking at resilient community building because that's where we think our money has the biggest impact. While in the past, our focus was maybe on the individuals suffering from the impact of war and violence. Today, it is we have turned to much more systemic views. What is the impact of violence on health systems, on water and sanitation systems, on irrigation system when we work in rural communities? And so we shaped and reconceptualized our humanitarian work to have, yes, an urgency and emergency dimension, but how we anchor it also in community resilience. And I think from being an organization almost exclusively focusing on post-event cleaning up the mess, we have become an organization with a clear preoccupation on how to prevent. And I think with all these shifts, I think it's extremely topical that I'm on this panel, because what we see is that climate finance is still very weakly represented in those most vulnerable contexts in which we operate. And we see the necessity to partner in different ways. We have great partnership with AFD and some other development agency, with the World Bank, with the African Development Bank. And I think this is where we need to further elaborate on what we can do together. You are muted.
Yeah, sorry, this is very interesting. The way you engage, is it because climate adaptation, I mean, requires, and especially the resilience requires a longer term perspective, but you're used to work with more shorter term type of interventions as well. So what does it mean in practice? Could you give us an example of what does it mean for you to partner with these financial institutions, and what would you expect them to be doing?
Well, first, the longevity of our engagement basically has moved us from being short-term to being long-term. Our average presence in fragile contexts today is more than 30 years. That doesn't sound like short-term emergency. We have been for 35 years in Afghanistan, for 40 years in Iraq, for 45 years in the DRC, for 25 years in the Sahel. And so the longevity of the protractedness of the crisis forces us to take a longer-term perspective. And in the way we frame and formulate, I think we are now managing basically two portfolios: an emergency portfolio of life-saving and a resilience building portfolio. And this means that these are different types of projects to finance. I give you two examples. I mean, in the DRC, we have done 15 years of water trucking. I mean, that's simply unsustainable. We have to fix water systems. When we look at rural vulnerabilities, we have basically helped survive some of the farmers, but today we have to look at livestock, at vaccination, at rural capacity development, and maybe building more resilient water distribution system and water management system in rural areas. And these are typically projects which no humanitarian credit line would eventually finance, because they are really in the realm of development actors and development finance, while from the character of the places in which we operate, we are still operating in very sensitive conflict and violence-driven areas. And so we have a new type of problem emerging on our plate, which is long-term emergency which can't be coped by short-term measures, but need long-term finance as it needs long-term perspective. And here, I wanted to make a point with regard to what you said in your introduction as well. I think we have seen commitments in the Paris Agreement to shift from or to balance mitigation, adaptation, and to go into longer term. And our figures say the same as yours, that in our area, only an infinite part of our work today is financed from climate funds, while many of our activities are increasingly relevant to climate adaptation processes. So this discrepancy, I think, is important to highlight. And there is, of course, a discrepancy and a disparity between the provisions of funding to stable middle-income countries, which where most of the climate adaptation fund goes, and going into fragile contexts. And the fragile contexts, unfortunately, are the most risky ones. So I think we need a renegotiation of our risk appetite and risk management systems. Otherwise, we won't draw adaptation money into most fragile contexts.
Absolutely, and that's the connection also with this humanitarian 2.0 type of approach that you were calling for. Well, I'm very glad you joined our panel and share your insights with us. Ms. Filipp was supposed to join, but she was prevented from joining our panel, and I have to really thank Dr. Gilles Kleitz from IFD, who is the Director of Agriculture, Water and Biodiversity, and that has just at the last minute just jump in to share some of the insights on biodiversity and why we should care also about biodiversity, and what is the implication between climate change and biodiversity protection.
Thanks, San, and thank you again for the invitation, though at the very, very last minute. It's really a pleasure to join this discussion. I'm an ecologist and a natural resource manager by training and by profession, and I tend to consider that looking at climate without looking at nature is just extremely dysfunctional. And I am still convinced that we should have only one Rio Convention rather than three. Biodiversity in terms of adaptation brings almost everything that we need. And it's very difficult to think of adaptation devices that actually don't mobilize ecosystem services at large and the capacity for life to adapt. Of course, we might rely on infrastructures, gray infrastructure for adaptation, some better efficiency in protecting ourselves against climate accidents and so on. But eventually, it is really natural infrastructure and natural services provided by ecosystems, such as functional watersheds, fertile agricultural soils, stable coastlines, productive wetlands for fisheries, productive fish stocks that actually will help humanity go through a climate crisis. And when you think of it, more than almost 3 billion people. There was a study that came out 2 weeks ago that pointed that 2.8 billion people depended for their daily lives on the direct services of ecosystems, for their food, for their proteins, for their shelter, for their water, for their health and medicine. Now, if this is not a proof that biodiversity is at the core of our ability to adapt to climate change, then I don't know what is at the core. So I think my point is that the services of the life fabric of the planet to go through the coming decades is absolutely essential. And we should indeed make sure that adaptation policies really mobilize ecosystem and nature-based solutions. As a bank, I think it is important to point out that these nature-based solutions for adaptation are actually bankable. They are not bankable as conservation projects. They are bankable as green cities, green infrastructure, productive watersheds, sustainable management of forests, rendering a number of adaptation services, etc. So they are really bankable. Ecosystems as an adaptation device is bankable as an investment in natural capital that provides a number of economic services. So this requires metrics, and this is one of the key points. When you shift, as we are doing in this discussion, maybe from mitigation to adaptation and to biodiversity per se, you're shifting from the sort of monofactor of carbon criteria to starting to get more complex with adaptation, where measures and metrics are multi-factor. And then if you go to the fabric of life itself, biodiversity, it's even more complex of metrics to measure dependency, to measure impact, to measure risks, financial risk related to the degradation of ecosystem. All this is absolutely key to make banks able to actually mobilize ecosystem as an adaptation strategy. But it's happening. And if we look at the history of a number of public development banks, there was, historically, we used to think that biodiversity was more the likes of elephants and pandas and tigers, a nice animal, to conserve. And now we look as the fundamental basis for sustainable and resilient development.
Yeah.
So we really have to make this more and more measurable, bankable, and included in our climate policies.
Yeah, absolutely. This is very important to, I like your stress on the measurability, and as I started my introductory remarks on the bankability, so also showing the bankability. There's this coalition for convergence of climate and biodiversity finance. Do you want to say 2 words about it, or?
Sure.
Or do you,
Climate finance is about 8 to 10 times bigger than biodiversity finance. Within climate finance, you have said that adaptation finance is roughly 10%, 15%, somewhere there. So biodiversity is even smaller. And yet I've just said that it's the the fundamental basis for a lot of adaptation. Yeah. So because of that, we've decided with a number of other banks to decide, basing ourselves on science, that nature could provide 1/3 of the solution to the climate crisis, and that therefore 1/3 of climate finance should be nature positive and mobilize ecosystem and so on. So 2 years ago, we launched this coalition, and we started working within AFD, within another of partners, to ensure that 1/3 of our climate finance, which is 5 billion per year at AFD, would be nature positive, i.e. mobilize ecosystems such as forest, ocean, coastlines, watersheds, etc., agroecology, and so on.
And as you speak, perhaps we can see the slide. I think there's one slide that your colleagues have prepared, perhaps that, sorry for interrupting, but perhaps that can be a useful visual, and then please continue.
Yeah, so, and we are basically not so far from this objective of reaching 1/3 of our climate finance nature positive. We started at 18% about 4 years ago, and by really mainstreaming biodiversity, especially nature-based solution in the different sectors that I mentioned, you do achieve important both climate and biodiversity co-benefits with very tangible positive results on adaptation. So I think, IFAD has joined the coalition. We have half a dozen of banks that are really looking into it. And I think it's a good practical way to link the 2 COPs and go back to my first statement of we should maybe have only one convention. Make sure that NDCs And NBSAPs, the National Biodiversity Strategies and Action Plans, are actually conversant, that they talk adaptation together, that they talk carbon, and that they talk biodiversity rather than, these silos.
Yeah. Now, this is very interesting. We don't see the slide. I don't know if we have a technical problem, but I think you explain it very well. So I think this coalition of convergence is very interesting, because it is an example of what can be done and perhaps can inspire also others. Thank you very much. Let me turn to Amal Lee-Amin, who is the senior advisor at the COP26 unit. So I'm in a very heavy responsibility right now. So thanks a lot for taking time in your very busy schedule also to join us. And you are not only the climate change director at CDC. How do you see, the COP26 in terms of what they should deliver for adaptation and resilience? We heard Patrick earlier telling us, the ambitions that what should be done. What do you think can be achieved?
Thank you. And yes, it's great to be here, just like 1 year after we had the event on adaptation, and in particular, how to accelerate private investment in adaptation, that ourselves with FCDO and the Global Centre for Adaptation actually convened with many representatives who are on this call, on this event panel, and others. And I think what was really interesting, it showed that there is now a growing recognition of the need to do a lot more. I mean, this is not surprising when we see the climate impacts that are happening globally around the world, but particularly in the developing world, which are particularly vulnerable. But also a growing interest from the private sector, both to understand how they themselves can become more resilient to climate change, as well as how they can contribute towards some of the solutions. And, I'll come on to that in a minute, because I think this is very much something that we've been working on at CDC with others, including Laurie and her team at FinDev Canada, AFD, and many others around how we can work to increase investment in private sector investment, adaptation, resilience. But from a COP26 perspective, I mean, Patrick said very, very well what really the key priorities are. I mean, first and foremost, it is essential that countries step up their ambition to stay within the 1.5 degree temperature limit. As we know from the IPCC report last year, the difference between 2 degrees and 1.5 degrees can be devastating for some communities, some countries, some sectors, and particularly actually for biodiversity. I mean, the coral reefs, for example, will be gone. So it's, ensuring that countries come forward with more ambition and that they continue to raise that ambition moving forward is also an absolutely essential element of what is needed to give countries a chance to actually be able to adapt to climate impacts, because adaptation, as referenced in the UN Convention, I mean, the assumption is that adaptation can take place over a period of time that allows whether that's communities, whether that's different sectors, whether that's natural ecosystems, to adapt to the changing climate. Of course, the level of climate impacts we're seeing now is making it much more urgent, however. And so, of course, one of the other key priorities for COP26 is to increase and signal a strong increase on adaptation finance, and look towards achieving a balance of adaptation finance, adaptation and mitigation finance. And in particular, recognizing the importance for ensuring that those resources also get to the most vulnerable countries, which, as we know, many countries, the less developed countries and the small island developing states as well, but also the most vulnerable communities actually within countries, and recognizing the importance of community-based adaptation, as well as, I think in particular, as Gilles talked about in in great detail the importance of nature-based solutions for adaptation and for resilience is, I think, becoming increasingly recognised, and is an area that hopefully coming out of Glasgow will also be recognised as, you know, a core part of what we do, particularly from a development finance perspective, and what the public development financial institutions start to do. Actually, oh, sorry.
No, sorry, I didn't want to interrupt you, but I just wanted to ask you, you know, since you are also, you know, you're at CDC focusing on these kind of issues, and you know, being at this summit, well, what would you like to have the public development banks and DFIs like you? Well, what should be their message? You know, coming out of Finance and Commons Summit, what should be the key message for the COP26? And perhaps if you could tell us, you know, how they could, in a collaborative way, you know, what they should be doing together to achieve these ambitions that you were mentioning.
Yeah, so I think, as we saw last year's Financing Commons Summit, and of course this year, even more so, the public development finance organizations are increasingly recognizing the role that we have in enabling the transition to resilient economies, as well as also delivering on decarbonisation. And so this recognition, in fact, it was in a satellite event yesterday, ahead of this discussion, around the importance of aligning to the Paris Agreement and ensuring that all our financial flows are increasingly and over time aligned with the goals of the Paris Agreement. And ensure that through our financing, through our investments, through our technical assistance, through, you know, everything that we do, that we are supporting our countries, that we invest in, or that we finance, as well as the private sector, to be part of this transition, and importantly, a just transition to net zero and climate resilient economies over time. And I think we're already seeing very strong indications of that, and the important role of, as you said, San, the critical role of collaboration and cooperation when we think about adaptation finance in particular. So as a DFI, CDC, as a DFI, and with our other DFIs that only invest really in private sector solutions, it is critical. As you said at the beginning, San, we tend to be project takers rather than project makers. So we do need to see the pipeline of bankable projects coming forward. And that is, unfortunately, we still have some way to go in seeing the necessary pipeline coming forward for adaptation in the private sector. So whilst it's excellent to see the numbers that the multilateral development banks, the bilateral development banks are bringing forward, still the vast majority of those resources are flowing into governments or flowing into public sector interventions, which of course is critical, but it is also essential to overcome some of the barriers to private investment in adaptation. And really, I mean, one of the key barriers is for many businesses, they just don't see what is the business case. They don't, it's not necessarily clear where the revenues are coming from, how is this really a viable business. This needs to change, and the role of collaboration is essential in that, where those such as the DFIs who engage with the private sector, but those like AFD with the multilateral development banks who engage with governments, and those bilateral agencies that such as FCDO, USAID, who can also bring the necessary resources to help overcome the barriers to private investment in adaptation, because governments cannot do this on their own. Of course, governments have to lead the way, but it is going to be essential that the private sector is a part of what is an increasingly urgent agenda for increasing adaptation and resilience.
Absolutely, and as DFI, you have a key role, in leveraging, but in demonstrating perhaps also the merits of going into adaptation. And you were mentioning Paris alignment. I mean, I think in a previous session there was also talk about SDG alignment even more broadly. We also produced with the European think tank group for this summit a whole report on how you should have Paris alignment and SDG alignment for all the activities, but also ensuring that some of the activities are indeed bankable and you can have a profit. Let me turn to Laurie Kerr, because you are the CEO at FinDev Canada, and I know you put a lot of emphasis also on these kind of issues in the adaptation and resilience investor collaborative that was launched, in fact, last year. So could you tell us what has happened there, and what concretely, beyond all these nice words, what is done in practice?
Absolutely. Well, many thanks for the kind invitation. It really is a pleasure to be here today with you, San, and with colleagues across the panel. So great to see everyone. So just to provide some additional context to what Patrick and Emily alluded to with the collaborative, last year at the Finance in Commons Summit, CDC Group, the UK's FCDO, AFDM Proparco from France, FMO from the Netherlands, together with the Global Center for Adaptation, launched the Adaptation and Resilience Investors Collaborative. Other DFIs and MDBs and public development banks have joined the collaborative since then and now stands at 14 members. And more will certainly be announced at COP26 that is coming up. FinDev Canada joined the collaborative earlier this year in May alongside the US DFC and Italy's CDP. So quite a good grouping of DFIs. Overall, the collective objective, as both Emily and Patrick alluded to, is to work together to accelerate investments in climate adaptation and resilience, which, as the name implies, is the ultimate goal of the collaborative. Over the past year, there's been 3 working groups that have been established and set to work. The first one is the Adaptation and Resilience Metrics Working Group, which is working towards common definitions and standardized approaches for identifying, measuring, and reporting the contribution of investments towards adaptation and resilience objectives. And they're also looking at the positive impacts of investments on people and ecosystems. The goal of this working group is to enhance peer-to-peer learning and joint work for the adoption of common approaches towards investor-relevant metrics. And this will enable all of us to speak with a common language with the private sector, with investors and financiers, so that we can gear up the climate adaptation and resilience investments that we've been hearing we absolutely need to do. So that's the first working group. The second working group focuses on developing a common approach for DFIs to better identify, assess, and mitigate physical climate risks in our portfolio, another theme that we've heard in the conversation today. And be sure that the idea here is not to reinvent the wheel, but rather to develop guidance for DFIs and other financiers, public and private, that are inspired from existing and emerging frameworks and tools. And this guidance is set to cover key aspects of the investment process, from pre-screening through due diligence to exit of investments. And one of the priorities of the collaborative is also to enhance the ability of our clients, rather, to address physical climate risks. So both on our side as institutions, as well as addressing physical climate risks of our clients. And in that regard, the collaborative is looking to engage clients in a structured dialogue about consistent disclosures to reduce transaction costs, et cetera, et cetera. So those are 2 of the working groups. And the third working group is focusing on finance and investments. And again, we've heard that this is a key nut to crack. And so this working group aims to tackle gaps to greater levels of private investment in adaptation and resilience across developing countries. And by bringing together a number of, again, public development banks, MDBs, and DFIs under the collaborative, we see synergies for joint or co-investing in climate resilience and adaptation. And we're exploring structured solutions through different approaches and potential investment vehicles. So 3 working groups that have been established, hard at work during the course of the year, with much work left to do. But overall, from our perspective and from the perspective of our collaborators, we do see that the collaborative is a really great forum to work together to advance investment in adaptation and resilience. So a little bit of an update on what the collaborative has been doing to date and how we're all gearing towards more work in the future.
Oh, that's great. I mean, I was aware of the collaborative, but I didn't know you were doing. You were so active. So this is quite encouraging in terms of the way forward. What about FinDev Canada itself? I mean, how do you in practice try to integrate? We were saying, I mean, I don't know how much FinDev Canada does on adaptation, but I mean, how do you try to integrate that into your work and perhaps mainstreaming these elements of resilience in your own organization and operations?
Yeah, thanks so much for the question, and I'll answer from FinDev Canada's perspective, but all the DFIs in the collaborative certainly have are at different points in their journey of integrating physical climate risks and looking at adaptation and resilience. But just allow me to provide a quick snapshot of FinDev Canada for those who may be less familiar. So we're Canada's development finance institution. We were established in 2018, and our mission, like Amal said, with respect to CDC, is we provide financial solutions to the private sector and mobilize private investment in developing countries. We focus on three impact goals of women's economic empowerment, market development, and climate action. And this is where mitigation as well as adaptation and resiliency come in. We're focused on two priority geographies of Latin America, the Caribbean, and Sub-Saharan Africa. So just with that context, just so people have a better understanding of who we are, as I mentioned,
you're well known, don't worry.
We're committed to, obviously to supporting adaptation and resilience in the regions that we serve, which are amongst the most vulnerable to the impacts of climate change. And just to give maybe a data point here, South America and Africa each have contributed only 3% to historical global CO2 emissions, but they're disproportionately affected by climate change. And clearly some of the sectors that we work in particular agribusiness and agribusiness value chain, are especially hard hit by the impacts of climate. So in terms of integrating adaptation and resiliency, there's a number of learnings that we're leveraging from the collaborative, and I'll outline just two ways. So first, from the collaborative, we're deepening our own approach to assessing and managing climate risks within our own portfolio. We've already seen examples of our clients that have been negatively impacted by climate change in their own operations and in their supply chain. So as we better understand the exposure and the vulnerability of our borrowers and investee to physical climate risks, we will be in a better position to support them at improving their capacity to adapt and manage these risks through, for example, technical assistance. So that's the second way that we're leveraging the collaborative to better position our support to clients. So we're using the collaborative for our internal means, as well as, again, for leveraging it to support our clients. And our objective here is to work towards ensuring all investments, of course, are resilient to physical climate risks in line with the overall goals of the collaborative. And going to your point of, how much do we look at in terms of our support in terms of adaptation and resiliency. Like many peer DFIs, we currently have a larger exposure to mitigation investments, renewable energy and forestry, but we are starting to see some investments in adaptation and resilience products and services, and we're really excited about this. And I can maybe share really quickly just a couple of examples.
Just one, because we were running out of time, so.
Okay, excellent. Well, maybe I'll just highlight one then. So one is a food fund. Earlier in 2021, earlier this year, a group of the DFIs got together. It included CDC and Norfund, FinFund, Bio, as well as FinDev Canada. We joined together to make an investment in the FiCS Food Fund 2. And this is a fund that invests across the food value chain in Africa in mechanization, food processing, manufacturing, logistics, etc., to strengthen and increase food supply as well as local production. One of the fund's first investments is in a firm called Farming and Engineering Services, or FES, which is an integrated agricultural solutions provider established in Malawi in the late 1960s. And this is obviously a region where resources are limited and input costs are high. And FES, they've expanded their service offering to include a comprehensive range of climate resilience agricultural solutions. And there's a long laundry list: drone technology, precision farming, et cetera, et cetera. So this is an example of how we're supporting a fund that is investing in adaptation and resilience. So just a concrete example of where we're directing our resources.
That's great. I'm sorry to press you just in 30 seconds, because we're really short of time, and I want Dante Mossi to also have enough time to talk before we conclude. But can you tell us just in 30 seconds the connection between climate adaptation and women? Because I know gender is very strong on FinDev Canada. And do you make an effort to try to combine, I'm sure, the two? Because we know that women are very much affected by climate adaptation, but also have a very strong role in and very effective in pursuing climate adaptation strategies.
Yeah, no, it's an excellent question. You're absolutely right, and a much longer conversation than 30 seconds. But indeed, we're looking to make those connections. Women's economic empowerment and gender equality are one of the three impact goals that are first and foremost at FinDev Canada. And so, as we're looking, just like emerging markets and developing countries are disproportionately affected by climate change, as you've rightly pointed out, so are women who have a disproportionate responsibility for food and water and what have you and care. So to the extent that the countries that we operate in are negatively impacted by climate changes, we know that the types of solutions and the way that we want to support women, and there's a lot of amazing entrepreneurialism that is occurring, across women-owned businesses throughout emerging markets. This is an area where we're also looking to draw those links. So going forward, we're looking at exactly that nexus of gender and of climate change. So that's something really important that we will be looking forward, delving more deeper into as we go forward.
Thanks. I'm sorry, I cannot give you more time, but I mean, I knew you would be in an excellent position to talk about these kind of issues. Thank you very much. Mr. Dante Mossi, you're the CEO of the Central American Bank for Economic Integration. Can you tell us perhaps about how you engage in climate adaptation? And I know you're doing a lot on blue economy, so this is perhaps an additional angle that you could perhaps illustrate for us in this discussion.
Thank you. Again, I think when I hear about adaptation, usually people try to think on large infrastructure investments, but at the same time, in Central America, we do have the dry corridor. These are peasants, farmers, who live in a large corridor that spans throughout Central America, in which people suffer from droughts during the summer months and floods during the rainy season. So we recently got a GCF operation that includes a grant and a loan to actually help these peasants to manage a way of living. Basically, we have started with financing small air dams and to manage the water in a more efficient manner. And but more recently, we got more money from the Green Climate Fund to do. So the loan actually was received by CABEI, and CABEI will actually use financial institutions to provide loans, very soft loans, to these peasants to finance water pumps powered by solar energy, smaller dams around their land, and electric bikes, for example. But thinking a bit bigger, we also do work with coastal communities, and particularly the Gulf of Fonseca. So this is actually one part of the economy that I think has been ignored, basically, in our region. I mean, my previous life, I worked in West Africa, and I saw what commercial fishing can do to the livelihood of people who live along the coast. And I can tell you the World Bank invested so much money to try to mitigate the enormous damage done. So in Central America, I think we are still early. So, thankfully, Costa Rica recently rejected a bid from companies from some Asian country, I will not name the name, that wanted to do commercial fishing in Costa Rica, and the president vetoed the law. So I think we're in a region in which our fisheries are also threatened. The way of living along the coast is threatened not only by commercial fisheries, but also rivers that are contaminated and flowing into the sea. So what we have been doing, I think, and I know it doesn't sound very modest to say it, but we have launched ESG bonds, and the markets are being extremely generous because we have a very solid, environmental and social platform for issuing bonds. And so the market has recognized that. So we have been able to provide financing at very low rates to governments and to private sector to do what is needed on adaptation. So, but coming to the blue bond, I mean, we are working with coastal communities, and so we believe that it is time to focus now on the seas. How do we protect the sea resources and the environments, the wetlands? And for that, we want to actually to be even more transparent to markets and say, look, we'll go and issue a blue bond because we want to work to conserve, what you cannot see from above in the sea, and protect all the coastal developments that are taking place. Just for example, El Salvador has a major project called Surf City, which is basically bring tourism to do surf. And it's essential that sanitation is actually properly done. I mean, CABEI actually has been doing this for many years, and we have the pleasure that Lake Managua, for example, has been actually recuperated from drainage from Managua and other cities through the proper sanitation effort. So, and this has been pushed by CABEI. So we are working on this framework to actually to tell the markets what we are doing. The coastal cities by nature are actually very rich, but they do have a lot of poor people. So, so we're trying to make the case that we actually need very effective investments, so people in these communities can actually preserve their way of living, but at the same time they can actually escape the trap of poverty.
This is great. You're talking about adaptation is broad coverage, but I mean, of course, the blue economy is really fundamental also in this whole dimension. Could you perhaps elaborate a little bit on the challenges that you have encountered in trying to tackle adaptation, since everybody says it's difficult or there are not enough bankable projects and so on, and perhaps I mean you choose either in the context of the blue economy or more broadly on adaptation, and how you manage to overcome it, and perhaps to show, I was talking before about this demonstration effect, or to show that it is working. You have a very strong role in the region. Could you elaborate a little bit on this?
No, thank you very much. I mean, what I call my secret weapon, my treasure at CABEI is actually the preparation funds. I mean, it sounds tricky, but when I joined CABEI 3 years ago, our preparation fund was about $5 million. Now it's about 30, and getting injected by donors. I mean, Korea gave me $10 million, Taiwan $5 million. The European Union has come with about 25, the Green Climate Fund, with an equivalent amount, because preparation is the key to have bankable projects. And that's true for public and private sector as well. So, and as you said, I mean, it's not only essential to prove that there are bankable projects, but how people actually can adopt these technologies in their way of living. So, for example, we are trying to introduce the concept of electric mobility. And the thing is that when you tell people, and I'm not telling you, folks like us here in this panel, but people who's on the street, and I talk to them about hybrid cars. They said, what the heck is that? What is an electric car? They have no clue. I mean, when you go out and you see it like in a European capital, oh, this is an electric car. But here in Latin America, I think the concept is still very green. I mean, even entrepreneurs, when you are telling them, look, I do have very soft financing that I can bring to you. So Central America imports cars. We don't manufacture them. So to do the transition is actually very easy. I mean, that's what I tell all the politicians here. But still, there's some resistance to change. But that's true of every, in technology you want to introduce. So back to what's the challenge of introducing resilient technologies is actually teach them by example. We do have, for example, a river in Guatemala. It's a very long river that brings trash. to the coast of Honduras and the islands in the Caribbean. So there's you can imagine a bit of an uproar in Honduras. What do we do with the trash generated by another country? So some organizations have decided to go in constructing nets to capture the trash, and I said, no, that's not the sustainable way of doing it. We need to stop the trash from becoming trash. So we need to step up on recycling, and so our approach has been, let's work with the companies and private companies on how do we actually recycle more, and and avoid the problem of having these dump sites to grow of items that should not be there in the first place. So and thankfully, and this is where Central America is such a wonderful lab, we have countries that, like in Honduras, I mean, that they are recycling a lot of plastics, metals, and paper, and so the idea that we are actually trying to show people in Guatemala, private sector in Guatemala, is that they can do likewise. They can actually generate a parallel business by doing recycling, and so this trash will not go to the sea, will not go to the river. It will actually not be a problem for the local governments on how to manage these mountains of trash. So back to the point, I think what you mentioned is very important. It's important to have funds to prepare projects, to train people how to do it, and how to communicate this. But to communicate to potential beneficiaries in a language they can understand, they can actually adapt very easily. And just, I mean, an advertisement here. For example, electric or hybrid cars in the region. As I mentioned, we do have the financing available, but now we have the challenge of bringing cars that are electric cars or hybrid cars to the market. And so it takes a lot of pieces to kind of for these innovations to work. So, but back to the issue, I think it's essential for development banks like us to actually to be ready with preparation funds, with long-term financing, to be very accountable to the markets, and to actually to use the markets. We found a lot of investors who are willing to go the extra mile to find these smart investments. I gotta tell you, the bonds we have launched, I mean, some of them have been raised in Europe, which I find natural, very natural that investors in Europe are very conscious about this. But also, we have found investors as far as Australia and New Zealand. So, so having these very strong frameworks of for investors to trust what we are doing is essential in our work.
Yeah. Thank you so much. We have to conclude there. I mean, this is amazing, just the wealth of experience and perspectives that you all have. I mean, this is just very encouraging because, in fact, adapting to climate change is really a priority for the vulnerable countries and communities that are affected by it and are facing increasing risk. And I think as was mentioned also by Peter, or by conflict, and it's quite often the fragile communities that suffer some of the most. So the ability from public development banks to innovate, to come together, I think was mentioning this notion also of matrix to better assess the risk, to better measure what they're doing, to the collaborative type of approaches, which is very interesting. I find this adaptation and resilience investors collaborative is a very interesting and encouraging example for work among PDBs. But I think beyond, you were mentioning, how you attract private sector, how you should work more and you can work more with donors. How do you reach out to the local communities? This is really impressive and encouraging. I would just say thank you very much. The finance in common is a good way to just flag some of these issues, but all the harder work is afterwards. I'm sorry we don't have more time to continue this discussion, but we should have that in other fora. I wish you all the best for the COP26, and I hope the achievement will be there. continue. Let's collectively continue this work. We will certainly do so also with some of you on climate change and on the food system. We will have follow up to the finance in common with CDP and other actors, private actors. But thank you very much for your participation, and my apologies for the delay in the time, but it was so fascinating to listen to you. Thank you very much. Have a good end of the day, and join us tomorrow again for the second day of the Finance in Common. Thank you very much.